If you buy the wrong life insurance in America, it can quietly drain your money for decades, and most people don't even realize it until it's too late. What's up, everyone? Welcome back to Insurance Hacks America, the channel where we break down insurance, money, and financial protection without the confusing jargon or shady sales talk. Today, we're talking about how to choose life insurance in America and the common mistakes that cost families thousands of dollars. If you've ever felt overwhelmed, pressured, or straight up confused about life insurance, you're in the right place. Life insurance isn't really about you, it's about the people who would be left handling the bills if you're gone. In America, medical debt, mortgages, student loans, childcare, and even funeral costs can hit families hard and fast. Without a backup plan, that financial pressure can spiral quickly. Life insurance works like a financial safety net, stepping in when life throws the ultimate curveball. Real example, if you're 30 years old, earning $60,000 a year with kids, losing that income overnight could completely flip your family's lifestyle. Life insurance helps cover everyday expenses, keep a roof overhead, and reduce stress when it matters most. This is where most Americans get tripped up, and honestly, where a lot of money gets wasted. Term life insurance is simple. It covers you for a set period, usually 10, 20, or 30 years. It's way cheaper and designed to protect your family during the years they need it most, like while you're paying off a mortgage or raising kids. For most families in the US, term life just makes sense. Whole life insurance, on the other hand, lasts your entire life but comes with a much higher price tag. It's often pitched as an investment, but let's be real, those returns are usually weak, and fees can eat up your money. Many agents push whole life because commissions are bigger. Straight talk. If someone says whole life is always better, that's a red flag. For about 90% of people, term life plus smart investing is the winning combo. A lot of Americans think they're covered, but in reality, they're making small mistakes that can turn into big financial problems later. Mistake number 1. Buying too little coverage. Many people pick a random number like $100,000 because it sounds good, without doing the math. The problem? That amount barely covers funeral costs and a few months of bills. A solid rule of thumb is 10 to 15 times your annual income, which helps replace lost income and protect your family long term. Mistake number 2. Waiting too long. Life insurance gets more expensive every year you wait. Once health issues pop up, rates can skyrocket or you may not qualify at all. Pro tip: lock in a policy while you're young and healthy. That's how you keep premiums low and stay ahead of the game. Mistake number 3. Mixing insurance with investing. Insurance is meant for protection, not getting rich. Policies that try to do both usually come with high fees and disappointing returns. Mistake number 4. Trusting one agent only. Some agents push policies that pay them more, not what's best for you. Always compare multiple quotes before committing. Figuring out the right amount of life insurance isn't guesswork, it's about your real-life responsibilities. Start by asking yourself who depends on your income, how much debt you'd leave behind, and how long your family would need financial support. Think about things like a mortgage, car loans, student debt, childcare, and everyday living costs. A simple way to estimate coverage is using income replacement. Example, if you earn $70,000 a year, multiplying that by 15 gives you $1,050,000 in coverage. That amount can help replace income, pay off debts, and give your family breathing room. Real protection means planning for reality, not picking a random number and hoping for the best. Choosing the right life insurance policy doesn't have to be complicated if you follow a simple process. First, start with term life insurance. It's affordable and designed for real-life needs. Next, choose your coverage amount based on your income, debts, and financial responsibilities, not a random guess. Match the policy length to your life stage, like the years you'll have kids at home or a mortgage to pay off. Always compare quotes from multiple companies to get the best deal. And most importantly, read the fine print, no skipping this part. If a policy sounds too good to be true, yeah, it probably is. Before you lock in a life insurance policy, slow down and do a final gut check. Ask yourself if the premium is something you can comfortably afford long term, not just right now. Make sure the coverage actually protects your family and covers real expenses like income replacement, debt, and daily living costs. Pay attention to how the policy is being sold. If you feel pressured to rush, that's a warning sign. Good insurance decisions don't require panic or pressure. If something feels confusing, uncomfortable, or off, trust your instincts and walk away. The right policy should give you peace of mind, not doubts. That's a wrap for today, fam. If this video helped you dodge a costly life insurance mistake, smash that like button, hit subscribe, and stay tuned with Insurance Hacks America, because insurance should protect your family, not confuse you. Got questions or something you're unsure about? Drop them in the comments below, and I'll break it down for you. Remember, making smart insurance choices now can save your family thousands later. Thanks for watching, and I'll catch you in the next video. Stay smart, stay protected.